What if your money paid you every month, even while you sleep? In this video, we're diving into dividend stocks, what they are, how they work, and whether they can actually replace your 9-to-5 paycheck. Stick around till the end, because we'll break down the biggest mistake beginners make with dividend investing and how to avoid it if you want real results. So, what exactly is dividend stocks? Dividend stocks are shares of companies that pay out part of their profits to investors, usually every quarter. This payout is called a dividend. You don't have to sell the stock to make money, you just collect cash over and over again. Some of the most stable companies in the world like Coca-Cola, Johnson & Johnson, and Procter & Gamble have been paying dividends for decades. Dividend stocks let your money work for you, creating cash flow without clocking in. But how much can you really earn with dividends? It depends on the dividend yield. That's the percentage of your investment you get paid annually. For example, a 4% yield on $10,000 equals $400 per year. A 6% yield on $100,000 equals $6,000 per year. The more money you invest, the more you earn. But it's not just about putting in more money. It's about choosing the right stocks too. With smart investing, dividends can become a steady stream of income, just like a paycheck. Can you actually live off dividends? Yes, but it takes planning and time. Many people build a dividend portfolio that covers their monthly expenses. That might take $500,000 or more invested, depending on your lifestyle and the stocks you choose. But here's the key. You don't have to wait until you're rich. You can start small and invest your dividends to grow faster. This is called dividend compounding, where you buy more shares with your payouts, which then pay you more next time. Over time, your dividends can grow big enough to cover rent, bills, and beyond, replacing part or all of your paycheck. So, what kind of companies pay the best dividends? Look for dividend aristocrats, companies that have increased their dividends for 25 plus years straight. These businesses are stable, profitable, and shareholder-friendly. Some sectors to explore are utilities, consistent demand and steady payouts. REITs, real estate investment trusts, must pay 90% of profits to investors. Consumer goods, people buy these products year-round. But remember, high yield isn't everything. A super high yield can be a warning sign. The company might not be able to sustain it. The best dividend stocks grow both your income and your investment value over time. What about taxes on dividends? In most countries, dividend income is taxed, but usually at a lower rate than regular income. And in some cases, qualified dividends get special tax treatment. Plus, if you hold dividend stocks in tax-advantaged accounts like a Roth IRA or a 401k, you can delay or avoid taxes altogether. With the right strategy, dividends can be a tax-smart way to earn passive income. How much do you need to get started? You can start with as little as $50 or $100. Many platforms offer fractional shares, which means you don't need to buy a full share of expensive companies like Microsoft or PepsiCo. Use a DRIP, a dividend reinvestment plan, to automatically reinvest your payouts. It helps your portfolio grow faster without doing anything extra. Start small, stay consistent, and let your dividends grow into something powerful. What's the biggest mistake new dividend investors make? Chasing only high yields. Some stocks offer 8%, 10%, even 15% yields, but those are often risky. If the company struggles, it can cut the dividend and your income disappears. Instead, focus on strong financials, long-term track records, steady growth, reasonable payout ratios, not giving away too much too soon. A safe 4% from a solid company is better than a shaky 10% from one that might crash. What if the stock market crashes? That's a good question. During downturns, stock prices fall, but many dividend-paying companies keep paying. Some even increase dividends during tough times. That's why dividend investors often sleep better at night. Plus, if you're investing during a dip, you're buying more shares at a discount, setting yourself up for bigger future income. Dividend investing isn't just about returns, it's about resilience. How do you stay consistent with dividend investing over the long run? Treat it like a habit, just like going to the gym or saving for a vacation. Building dividend income is about consistency, not perfection. Set a monthly investing goal. Automate it. Reinvest your payouts. Check in once a quarter instead of every day. Long-term dividend investors often succeed because they ignore the noise and stick with their strategy. You don't need to be a stock genius. You just need to show up regularly and let time and consistency do the heavy lifting. Can you mix dividends with other income strategies? Absolutely. Many people combine dividend stocks, rental properties, online businesses, side hustles, royalties, or digital products. The goal is diversified income, so no matter what happens to one source, you still have others flowing. Dividends can be one powerful stream in your river of income, but they work best when they're part of a bigger plan. What's the difference between dividend stocks and growth stocks? Growth stocks don't pay you cash. They put money back into the company to help it grow. If the company does well, the stock price goes up, and you can sell it later for a profit. Dividend stocks, on the other hand, pay you money regularly, even if the stock doesn't go up much. Many smart investors use both. Dividends for steady cash flow, growth stocks for long-term wealth building. You don't have to choose one over the other. Combining growth and income can give you the best of both worlds. So, can dividend stocks really replace your paycheck? Yes, but it takes time, patience, and smart choices. Here's how to get started. Open a brokerage account. Start small, but consistently. Focus on strong, reliable companies. Reinvest your dividends. Track your income growth. Learn a little more each month. You don't need to be a stock market expert. You just need to begin. Your money can become your paycheck if you give it time to grow and work smart. It's not about hitting the jackpot. It's about building something steady and something that pays you for life. Start now and let every dividend be a step toward your freedom.